Hey, thank you very much for coming back for the second half. We're going to continue to look at using velocity banking for the credit card. In the first half, we looked at various aspects of it. This second half, we're going to dwell into a little further so we can see the benefits of it. So welcome to day one, part two. Let's look at financial capability. We've already kind of familiar with that in general. What is velocity banking? At its core, replacing your checking and savings account with a credit card and making payments. Velocity banking, there's a traditional banking cash flow of paying down your bills and debt and reducing interest. And velocity banking is a new form. It's kind of been around, I think, for decades, if not for more than 100 years. It's used in some European countries in general. We looked at the business card that I selected, Wells Fargo at 24.9%. So what is our monthly cash flow on the credit card? So in looking at it from a little bit at the beginning, we noticed that I was over the limit with the credit card at $7,546.58. So that's going to be used from the traditional way and also from the velocity way. Looking at it from a traditional way, we got the statement in general. Oh, I'm sorry, I need to go back. Okay, I'm sorry. From the traditional way, we had the $7,546. I'll make the payment of $230. It's at 24.990%. Of that 230, 159.59 is going toward the interest. 70.41 is going toward the principal. That'll close me out in January at $7,316.58. Now, if we do the velocity banking way, a little bit more is involved. It involved taking my first paycheck, taking the cash flow from it. So I originally had 1686.47. I took out the 1400 for all the housing. My wife takes that and she does some other type of banking to get some benefits for travel and some other items. The second biweekly payment deals with just being able to put my entire check in. So for the month, just my income is using the 1686.47 once, then the 1686.47 twice, minus the 1400. So you need to take out whatever you can't pay on the credit card. And that ended up, if we just did it the traditional way, the balance would be $7,316.58. If we do it the HELOC way, which I'm trying out, it'd be $5,421.11. That's 280 cents that I was 286 that I was able to put onto the card initially, minus the housing expense, and the entire 1686.47 that I'm putting on the card for the second 2 weeks. So for a total of about 33,094, I think. So what is our monthly cash flow in terms of some of the expenses? So as I just mentioned, here are the two paychecks that's being dropped in from 1680 from 16,000, I mean 1686, left with 2876 from the 7500. Then I come back later with the additional 1686.47. So that gave me the total of $5,573.64 if that was all. But I got to take out the other expenses. I have three flows of expenses. There's the housing, there's my personal everyday or the monthly, and then those are those expenses that are on the credit report. So with the traditional approach, again, if we can just stop with the 7316.58, that's where I was historically, but I'm moving toward this HELOC to see how this thing can work and pay down debt rapidly. So, with that in mind, my personal expenses come up to about $761 a month. My credit reporting liabilities come up to $439 a month, and that's total $6,621.11. So I'm taking what I used to pay, $7,316.58 for the traditional way that would have been left for my balance for this month. But now I'm using the velocity banking where I can put all or as much of my income onto the card and pay my expenses from it, like the housing, personal expense, and credit reporting liabilities. Now, between the two, I should have a difference of $695.47 between what I would have paid and what I was able to pay through Velocity Banking, and I still have access to $695.47. Again, one of the cons is that if emergency comes up, I really don't have access to the cash in the bank. So that can be a con in it. I think one of the cons. On the personal expenses that I talked about earlier, that's going to be the car insurance, entertainment, grocery shopping, etc. So as you can see, I don't do too much. On the credit report liabilities, includes the personal credit cards, the car payment, student loan, and mortgages. So as we noted, so at the end, after all the payments, after all the expenses, my check going in, I end the month with 6,621.11. That's a major step away from the 7,000 previously. So I think the velocity banking system can work for me and it can work for you also. So the next step, if you'd like to know more about velocity banking and how you can get started, how I can help you to get started, please drop me a line or give me a call. I also do micro loans, credit repair, also helping my clients with adding as a authorized user on a credit card. One of my clients has increased nearly 100 points or close to 100 points on his report after being on it for about two months. So if you're looking to increase your credit score, if you'd like to work with me, definitely give me a call or drop me a letter and let's see what we can do. Thank you very much. You have a great day.